Hi and welcome back to a new video on my channel where we talk about potentially interesting companies that could be interesting investment use cases, companies that have fallen a little bit beneath the cracks and a little bit out of focus of the public and disliked by the markets. And as always, of course, do your own due diligence, make your own research, check your own numbers. We're just trying to explore some interesting use cases. And today we're going to talk about one of the most powerful brands in the world. So it's not really a forgotten company, but it's a major company and a company that has been very, very unpopular with investors recently. And the company is, of course, Nike. Nike, the US-based sports and apparel company, named after, of course, the Greek goddess Nike, the goddess of victory. Great name for a company. And we will go through the company and try to understand what is going on and explore if it could be potentially an investment use case. So Nike, of course, is known to everybody that grew up in the last 50 years. It's a popular sports company. Of course, they had the major movie recently that was about the origins when they started to sponsor Michael Jordan, and of course, for every millennial is in love with Nike ever since they did take over soccer and or football with their incredible commercials that really changed the game. Where, for example, players were playing on an airport or playing on a prison ship with the music of Elvis Presley. So I'm sure a lot of you remember that, and of course with their "Just Do It" slogan. Let's jump in. Everybody knows the company, but let's actually look at the stock. Look at if it could be an investment case. So, looking at the company here, 1 year trajectory looks very bad. Made new 22-week lows recently. 5 year trajectory also does not look good. So the company is very much here trending downwards, moving downwards. If you see the long term, of course, if you've been with it since the IPO or only, let's say, since the 2010s, you're still in the plus. But we can see immediately looking at the stock price that the company is in trouble. And let's try to understand what's going on here, because only because the stock price is trending down, of course, doesn't mean that it's a good investment. It doesn't mean that it's cheap. So let's actually try to understand the reasons. So sometimes, of course, a lower stock price can mean that a stock is cheap if it's just forgotten by the market, forgotten by Wall Street, or unloved for some reasons. Sometimes there are reasons, and I think for us it's interesting to understand, are these reasons justified? And maybe could there be a trend reversal on side? So looking at more of the numbers here, we see that PE ratio of 22.5, price earnings ratio is very reasonable for a powerful brand like this. So that is not a high PE ratio. So looking at that alone, you could say, okay, already thinking, okay, is it interesting? And then dividend yield of 2.36% is also not bad. It's also not bad. Of course, it's not great. If you're looking for a dividend play, if you're looking to build a dividend growth portfolio, you want more than that. So, but it's not bad. It's definitely not terrible, especially for a brand like Nike. So that's why I'm thinking, okay, just looking at that, for me, it makes it already interesting. So we have to look a little bit deeper. So what is actually going on to then decide, could this be an interesting and an actual investment use case or not? So let's try to talk a little bit about what are the reasons. And I think there are two groups of reasons why the company is trending down. And the first one is, it's pure and simple a numbers reason. So we will look at the numbers and we will see the sales are going down and the debt is going up. And that's not great. That's not what you want. You want for your company to make more money and not less. So that's definitely a reason. And but maybe it's not. Maybe there could be a reversal, and maybe it's not really justified. And we will look at the bigger picture. And then of course there's the other reasons. So the political reasons, the market reasons, and the strategic reasons. So there's a lot of talks about tariffs, the competition of the company of Nike, other sports apparel companies, and of course the strategy of the company. But as I said, first of all, we will jump into the numbers. So let's have a look at the actual quarterly report of Nike. So they just released their quarterly report for their third quarter, which strangely ended in February. So they have a little bit of a different financial year to account for their peak sales periods. So that's why they're now in February reporting for they now reported for their third quarter, which ended in February. A little bit confusing, but that's how they do it. And first of all, let's look at the highlights that they listed themselves. And we already see revenues 11.3 billion, sounds nice, but here down 9%, so that's not great, that's not good. So on a quarterly basis, on a year-over-year basis, is 7% down. So already if you see that, then you understand, the stock price went down, revenues went down, the story makes sense. And then more specifically, troubling here, the direct revenues are down 12%. So the ones where they sell directly to the consumer via their own platforms, own shops, and own websites. 12%, this is not great, because also that's of course for them the highest margin if they can sell directly. And the other sales are down, wholesale, so if they sell at big stores of other companies, 7%. And also the margins decreased, and that's also never good. You don't want the margin to decrease. I could deal with falling revenues if the margin actually is increased, but that's not a good sign if the margins actually decrease. And looking at the numbers, so looking at the revenues, as I said, here we see 9% year-over-year change is not good. And that's the year-over-year change. And what is good is here that the cost of sales decreased, so they had to spend less to make sales, which is actually a good thing. The profit here, the gross profit, decreased by 16%. It's also very, very, very bad figure. And I think for a company like Nike, very important here, this metric, the demand creation expense. So basically what this means is marketing costs. So everybody that likes sports or is into sports will know that companies like Nike, or Nike in particular, they spend huge sums to sponsor athletes or teams. So for example, entire sports teams, soccer teams, to wear their kits, of course. And this is a huge expense for them. So this is over $1 billion that they spend every year on demand creation. And we see an increase in here of 8%, which is not good. Ideally, you would see them spend less and make more. But I mean, if they spend the money wisely, I think it's good. And we will talk about this a little bit later, if I think it's a good idea or not. Overhead expenses down, that's pretty good. Administrative expenses down is also pretty good. And net income down 32%. It's pretty bad. So now on the other side, let's look at the liabilities, also something that I always look at. So here, of course, this confusing metric, total liabilities and shareholder equity. I prefer to look just at the liabilities, because shareholder equity means actually how much ownership interest is in the company, which for me is not as important as, okay, how much does the company actually own in debt and has to pay, how much in debt does the company have to pay back and pay interest on. And we see that they decreased their long-term liabilities by 33%, which is sorry, what am I talking about? They decreased their total current liability. What am I talking about? They increased the total current liabilities by 24%. So this is not good. This is not good. 24% more in debt is the company, compared to a year ago. So it's definitely not great. This is definitely more than the rate of inflation. And if you see debt increase while you're also seeing the revenue decrease, that's pretty alarming. What I wanted to say is, what is good, that we see the long-term debt is actually going down. So I like this. We see long-term debt is going down, but it always depends on interest rates, of course. If it's more profitable to have long-term debt, sometimes it makes sense. Less long-term debt, of course, means that you have to pay less years of interest. So in total, you have to pay less. The other interests, I think, are a little bit, so leases for buildings and factories and stuff like this. So the total current liabilities of 24%, that is a problem, of course. But let's look at the revenue numbers in the regions. So we see that I think that most of the countries, most of the regions actually experience declining revenues. So 9/9 in the overall brand, but we see it's pretty similar picture with like North America -4%, Europe and Middle East, Africa, EMEA 10%, China 17%, and Asia Pacific 11%. And of course, in terms of market size, North America, Europe, China. I mean, of course, North America the most important one, but I think they're all very equally important markets. Like if we look at the market sizes, they're all very important. Like it's not like maybe some other companies which really have one major market, like very focused on Asia, very focused on North America. North America is the biggest one, but I think they're really a global brand, and this is also pretty synchronized that they see a sales decrease everywhere, which is concerning. But let's talk about why this could be so. Looking here at Seeking Alpha, so looking at the company, looking at the earnings and the projected earnings. So they had this trend of earnings going down, but the earnings are projected to go back up. And if we see that most of the times Nike actually beats the projections, so that doesn't mean that we can expect them will be able to beat these projections here, but just looking at the history of the company, they like to beat, and it could be likely that they beat those projections. And then we see a clear trend reversal, which is interesting. That's what you're looking for as an investor, right? You're looking for a trend reversal. You're looking for somebody you can go in cheap, buy low, sell high, or what most people do, buy high, sell lower. No, of course, we want to have a trend reversal, and we want to be early on the trend reversal. But we've seen some difficult challenges. But this is, of course, interesting to see that if this really holds true, and what could be the reason for that. So going back at the stock price, the company actually, we see here, November 21 was very good for the stock. They were flying high, And what was going on? Of course, it was pandemic. So nobody was buying any fancy clothes. Everybody was trying to buy sports apparel to feel comfortable working from home, and to be flexible working out. So very good for a company like Nike. And of course, these trends have reversed, and now the trends in fashion and consumer trends have reversed. And I think this is a big part about it. So there are multiple sides to the story, but I think a big part in this of the story is pandemic-related trends. But I think this will go back up again. So of course, everybody bought a lot of sports apparel, and then you have a lot, but it will even out over time. So I expect the demand for sports products like Nike's to revert back to the mean and to increase again. It's not guaranteed, of course, and it also depends on other factors that we will talk about, but it could be a reason. And I mean, of course, what we've seen before, like what makes this company interesting is they're a stable company, they're a huge brand, and they have a stable dividend history. So they have 23 years history of dividend growth, which of course is very impressive. And the payout ratio of 50% is very decent. It's not bad. So the dividend is not in danger or anything. Yeah, and if we look at the dividend history, then it's just very impressive. So the company has steadily increased the dividend ever since the 2002. Very good track record here. Of course, this is not a guaranteed, but just to give a picture here of what this company is actually all about. And let's go back into the reasons for why the stock price is looking the way it looks. Like, we looked at the numbers. They don't look good. The debt is going up and the revenue is going down. But I think there's more to this, because of course a big part is in the news, the tariffs. They're affecting all industries. And Wall Street also always they identified, okay, which companies could be worse affected by tariffs, and Nike is often mentioned as one of the companies worst affected by tariffs, because of course they have all their production outsourced, a lot of it in Asia, but I think also in Mexico, and a lot of it in China. And so the fear is that the tariffs will hurt Nike very some of the worst, because they rely so much on the global trade infrastructure, and they rely so much on global trade that they are not well equipped to deal with those tariffs. I mean, but I think Nike is an American institution, a U.S. institution, and they will find a way to deal with these problems, and everybody has to deal with those problems. Like, everybody is producing in cheaper countries and steeper constitutions. Of course, some companies more so than others, but I think everybody has to tackle with those issues. And I think Nike is very strong in the US market, like we saw, and if you believe in the US market, even though if importing to the US market will be difficult, I think they've also been working on some nearshoring strategies, reshoring, bringing some production back closer to the US market. So they're taking some steps there, and with the tariffs is always like, okay, will it really have that much of an economic impact? My personal opinion is it won't. This is purely my personal opinion, because, as I said, everybody has to deal with them, a lot of times they are used as a negotiating tactics, and more than a continuous new environment. And so we talked about the numbers are a reason for the stock price going down. We talked about the tariffs, and of course there is the competition. Like, there are more and more other companies that are really fighting over the market share of Nike, like Under Armour or On, the Swiss shoe company, or just cheap generic brands. So there's a lot of competition in this area. Um, but I think Nike is, yeah, they thrive on competition. That's it's ingrained in their business model, in their identity. So I think that will not kill the company. And then lastly, I think one of the reasons is the strategy. So they did, I think, some strategic mistakes, and they admitted to it themselves. And so Nike they really had a big market leading position. They were the market leader in sports wear, and they thought, okay, how can they expand? And they tried to become more of a fashion brand. They tried to go more into fashion, and by doing that, they kind of neglected their core business sectors and their core businesses. But they realized that, and they're trying to reverse that, and they're really trying to focus now on. So they're really trying to go back to focusing on sports, focusing on athletes. So what they're saying here in the quarter report is, what encouraging is Nike made an impact this quarter, leading with sport through athletes, storytelling, performance products, and big sports moments. So they're really trying to focus again on sports. Let me see again. They have another. I thought they had another statement somewhere. So yeah, but that's really what they want to do. They want to go back to focus on focus on the core business model, and I think that's definitely a good call. And yeah, so now we've talked about, we've looked at the numbers, we've looked at the reasons, the stories behind the stock, and now it's up to you to decide if it's an interesting investment use case or not. So just to summarize, we've seen the company's really trending down. We've seen it has a very cheap price earnings ratio for a strong brand like Nike. That's a cheap PE ratio. And but we've seen also that the revenues are really going down and the costs are going up. Not the costs, but the debt. And we discussed, like, okay, could these reasons for the declining revenues, so pandemic effects, tariffs, and business model, could these factors actually be switching back into the correct direction? I think it's very likely they could be. But yeah, still, of course, be careful with this, because competition is heating up, and bringing revenues back up is difficult. But I hope I was able to explain to you why Nike could potentially be an interesting investment use case. Let me know what you think, and see you next time.